Good afternoon, hello and welcome to a fresh new edition of Mid-Cap Radar. The market is up about 50 odd points, 9,927. I mean, basically, it's kind of gone to sleep, one has to say. And I think it is also true that with the Visarjan day today, I think a lot of offices are emptying out. And I think you'd sort of see that in market activity, market volumes. It's essentially based out of Bombay. I mean, brokerages based out of Bombay would see that impact happens every year, no two ways about it. But the market not really doing very much. There's just a small 0.15 odd percent change. The Bank Nifty is up a third of a percent. The mid-cap index is up about 0.7 odd percent. So those are big market indices. Joining me today is Anisha Jain. Anisha, good afternoon.
Hi, Prashant. Good afternoon. Well, yes, as you mentioned, the markets have stabilized around the 99.30 mark. So a good time then to run you through the top headlines. Market trades with slim gains. Mid-caps outperform with the index rising almost 1%. Banking, financial and energy stocks lead.
Reliance Capital stock adjusts post-demerger of the home finance business. The management of home finance business pegs post-infusion net worth at 1,500 crore rupees, expects returns on assets to be upwards of 1.6% by financial year 2020.
And Santa EV continues to gain as brokerages raise target and EPS estimates. Kwality reverses the downbeat trend to trade higher after management clarifies on market rumors, rubbishes claims of pledged shares.
In his first interview after taking over as the Managing Director and CEO of L&T, S.N. Subramaniam remains confident of meeting the order inflow and margin guidance for this year. Expects third quarter and fourth quarter to see bulk of the order inflows. Adds that divestment of non-core assets remains on track.
That's the important bilateral meeting between PM Modi and Chinese President Xi Jinping concludes. Indian Foreign Secretary says that discussions between the two leaders were constructive. Peace on the Indo-China border area was also discussed. Well, those were the top headlines at this hour then. Ashwini Gujral of ashwinigujral.com joins us now. Ashwini, good afternoon. The market is off the day's low. What do you make of the markets now and also your top technical picks?
See, today's view was that the market is going to chop around, and this is basically choppy action as it is with the rest of the globe. So nothing changes from the negativity of yesterday, but just kind of sideways, making up its mind, and that way probably the close will could be higher from where we are right now. And overall it's more positive than negative because the banks are today doing much better than yesterday, and mid-caps are also outperforming. So the next 2 hours you should be long. I don't think carrying a lot of positions overnight is a good idea. So for the moment, cement has done well today. India Cement is a buy with a stop of 176, target of 190. Dewan Housing is a buy with a stop of 524, target of 550. And Karnataka Bank is a buy with a stop of 150, target of 162.
Ashwini, just look at RBL Bank, I mean, if you will, and tell us if there's anything to be expected there.
See, RBL Bank went through its own correction and now is beginning to push higher. I think at some point we'll go back towards 600. The 200-day moving average is about 470, so that would act as a stop. But today, I don't think it's doing too much, hardly up 0.9%.
I mean, I think a couple of days back we spoke about Fortis, 151. It's not very much. It's collapsed. It's up about 2.25% or so. Any thoughts on that?
See, Fortis, 130 is a stop, and that is where the big buying happened. As long as that holds on, I think Fortis will move up. But like I told you, it's a situation stock. So you have to wait for something to happen to get that 10-15% type move.
Okay, Ashwini, thanks very much for that. And we will come back to you on the top of the closing bell. That's about an hour's time. His three ideas, essentially, DHFL, India Cements and Karnataka Bank at 130. Okay, let's talk about two stocks which have done phenomenally well. I mean, actually, I should say one stock has done phenomenally well, at least this year. That is Raymond. Raymond is up some 75% from the close of 2016. The other one is Arvind, which I think is not up that much this year, but has done well over the last couple of years. And we're just essentially going to juxtapose both these names and look at this. in a deep dive as far as fundamentals are concerned. Varinder is joining in. He's sort of dug into the numbers. Varinder, take it away.
Well, the move on Raymond, as you rightly said, has been very, very intriguing for many, many people. People tell me that it's a brand play. You will see the entire brand industry going ahead will surpass everything. So Aditya Birla Fashion, Raymond, Arvind, these are the companies to watch out for. So I just thought of just checking and doing comparison between Raymond and Arvind. So, I have taken various metrics in order to compare them. If I just go by the market cap, Arvind is nearly 10,000 crores. Raymond is nearly 5,200 crores now, which is there. If you go ahead in terms of enterprise value, again, Arvind is double of what Raymond is. If you go with EV to EBITDA reported by the company for FY19 basis, this is, I have taken the estimates for Credit Suisse for Arvind and Antique for Raymond's. You will see on EV to EBITDA basis, Raymond is trading around 12.2 times, while Arvind is nearly 8 times. Go to price earning ratio, Raymond is nearly 29 times, whereas Arvind is 15 times. Go to price to book, 2.8 for Raymond's and nearly 2.1 for Arvind. Well, ROCE and EBITDA margins also I wanted to check, to see how these companies have done. If you go with ROCE, clearly Arvind is expected to do well, nearly 15-16% ROCE for FY19 and nearly 11% for Raymond. Look at the margins, EBITDA margins. Again, EBITDA margins for Arvind nearly 13% compared to Raymond's, which is nearly 8.5%. So clearly this table tells you that, Arvind is making better margins, better ROC, but the valuations are lower than compared to Raymond. So, let us see why that could be the reason. So if you just see, as per Antique for Raymond, Raymond hasn't done anything in the last 2 years, clearly. But there is a huge opportunity which the analysts on the street are betting for the next 2 years. The growth run rate for FY19 is expected to be nearly 6,500 crores and a growth of nearly 17% in the apparel business. Likewise for Raymond's, management has guided nearly 20% growth in the apparel business going ahead. So the growth rate going ahead is also similar. But the reason why Raymond could be higher, one is the realty play, which everyone keeps on saying on Raymond, that could be one. And one is the distribution reach. The distribution reach for Raymond's is way, way higher than what Arvind is in terms of MSOs, brand retails and everything. But clearly, based on only numbers for FY19 also, Arvind looks very, way cheaper compared to, Raymond's. But if there are any internal plays, let's see what happens going ahead, especially the realty play, which everyone talks about on Raymond.
Welcome back. The market's sold off. We just have about 10 odd points or so, back to being absolutely flat. 9923 is where the index is at. We've been, of course, getting you top corporate voices from the sidelines of the Motilal Oswal conference. Joining us now is Mr. Satish Pai, Managing Director at Hindalco. Mr. Pai, it's a pleasure having you with us here, sir. Thanks indeed. Appreciate it very much. There have been recent reports, sir, talking about a potential bid for a company called Constellium Aerilis. Could you, first of all, talk about that? What are the plans? If you're planning to bid, what are we really talking about here?
Look, I think that, what I wanted to say is that Hindalco and Novelis over the last couple of years have been focusing on fixing the operation, refinancing, deleveraging the balance sheet. And as we have always said on many of our analyst call after every quarter, and it's nothing new, that we are looking forward to the next phase of growth, which firstly we will look at the organic opportunities, and then we will look at any inorganic opportunities that make sense. So I guess that's the best I can talk about what our plans are.
Well, hi, Mr. Pai. Because as you were saying, you'll have been focusing on deleveraging the balance sheet, and suddenly this acquisition comes out of the blue. But is there a possibility that we could look at an acquisition closing out in FY18? And if that's the case, how is the funding going to take place? What is the current debt in your books? What is it likely to be in the next 1 year, 2 years?
So, at this conference, which I'll be presenting at, we are making very clear what our game plan is. In the short term, our game plan is still to repay debt and deleverage the Hindalco standalone balance sheet in India. The Novelis bonds and the term loans have been refinanced, which gives you a roughly $79 million interest saving year on year. So we are going through a phase now where the markets are good. The demand for our both aluminium, copper, auto sheet is looking very good. So we are looking at growth opportunities, and I want to emphasize that first we will be looking at organic opportunities. Inorganic opportunities we have to look at as and when they come up, and we will do what makes sense and adds value to our shareholders.
Mr. Pai,
there are no immediate plans to do anything. Okay,
no immediate plans. But with regards to this specific company, of course you can't tell us if you're putting in a bid, if you've got bankers looking at this, etc., etc. But I just want to ask about how you think about it. You said...
But then why are you asking
No,
me?
the reason is this. You said that metal price forecast, etc., market is good. I mean, it kind of reminds one of when Hindalco acquired Novelis. And we know what happened after that for a couple of years, right? I mean, it's an extremely cyclical industry. I mean, you know it better than everyone.
Yeah,
so I just want to ask you how you think about an acquisition, and a large acquisition, which could be $1 billion plus. Yes, go on, sir.
No, that's why I'm sort of emphasizing our game plan, which is focus on your existing operations and clients, get your market share, get the right products and the pricing. In Novelis, we are focused on increasing the percentage of auto. And I think if you look at Steve Fisher's call after the last quarter, he did talk about the fact that, you know, we are soon going to announce probably organic increased auto capacity, probably in the US and China. In India, I have been consistently saying that we are going to be doubling our downstream capacity, as well as doing some brownfield debottlenecking in the Utkal refinery. So these are our actual growth plans. And these are what I call organic growth plans, which I can, you know, sort of reiterate and commit are on the works and going on. Inorganic opportunities come and go, and when they come, we evaluate them, we see whether it makes sense for the shareholders, and then we take a call if it makes sense. So it's not that, you know, we are all focused on what comes out in this media, somebody just threw it out. Not at all. We remain completely focused on our game plan, which I just said.
All right, Mr. Pai, then only time will tell, you know, the size of the acquisition when exactly it does close out. So let's move on then. Let's talk about aluminum pricing. This year, you know, we have seen a big rally in aluminum. It's up close to around 20% approximately, taking everyone by surprise on the back of those shutdowns in China. Where do you sense that aluminum prices will settle down? You could comment on those capacities that are shutting down in China. And also, sir, you know, Mr. Pai, we had spoken quite a few months ago. You were telling us that you all were lobbying for some protection from the government of India in terms of imports. What's going on there? Since the prices have risen so much, now we're unlikely to see any protection coming in?
So two very good questions. So let me start with the first one on the sort of macro, where do we see LME going forward and what is happening right now. If you remember, we have been consistently saying that the Chinese government for the last 6 months had been making various commitments from an environment point of view that they are going to shut down polluting capacity, they are going to shut down illegal capacities. And really the market was actually wondering whether these shutdowns would happen or not, because in the past the Chinese have said that they would cut capacity, and sometimes the capacity had not been cut. I think what we're seeing now is that some actual cuts have been happening, which is the reason why you see LME at the 2,000, 2,100 levels. Now, if those cuts actually happen, then I think what you're going to see is that LME is going to be sustained at these levels, and if you ask me, could even go higher. Now, also helping is a weaker dollar. You have to know that when the dollar weakens, commodity prices normally go up. So you have this combined effect of Chinese capacity curtailment along with a weaker dollar, and also helped by very strong aluminium demand, both in China and in the rest of the world. So I think all these three put together, we should see reasonably good LME prices going forward. Now, on the second point, when we were approaching the government for, MIP, minimum import price type of help, At that time, LME was in the 1600s.
Correct.
And I think that, you know, at the 2000, 2100, our request to the governments is no more for an MIP.
Okay.
But what we remain concerned about is that large amounts of scrap are coming into India, and also a lot of downstream products are being imported into India under zero duty under the FTA agreements with various countries. So what we are actually talking to the government about is how can the scrap imports be regulated? We are not talking about stopping, but how can they be regulated? As well as zero duty imports coming in from ASEAN countries and other countries, which the metal originates probably in some other country and comes through a zero duty country, that we should be taking some measures under. So this is where now the shift to what we are talking to the government about.
Mr. Pai, two questions. One, if prices sustain here, and as you said, they may even rise from here, LME prices, I mean, the basic demand-supply sort of factors should kick in. More demand will find its way to the market, and maybe, you know, players will try and take advantage of the attractive prices. What are the chances that some of that shut capacity finds its way back to the market one way or the other? One. Second, I mean, as they say, once bitten, twice shy. What do you think, generally speaking, there is no real imminent global crisis at hand right now? But we're all only wiser in hindsight. As you see it, are we set in terms of commodities remaining stable without really actually putting out a forecast? But you see no real big dips or anything of that sort along the way, at least the next couple of years. Go on, sir.
Look, you know, couple of years is a tough one. I mean, if you look at probably 1 year out, I am reasonably confident now with if the Chinese cuts have happened, that we should see LMEs continue at this level. But as you quite rightfully pointed out, basic economics, if the commodity price is high, then people with shut-in capacity or who have capacity available will try to bring that into the market because there's money to be made. Now, the interesting thing is that most of that shut-in capacity happens to be in China.
Correct.
So if the Chinese government really follows through on its environmental plan, then most of that shut-in capacity cannot come in. The remaining capacity that can be expanded is Middle East, India, and Australia. So I think in all these places, there are various factors which I do not see large-scale new investment into smelting coming in the next year or two. As you said, people are going to be very careful before large investments are made to add new smelting capacity because there is still so much capacity shut down in China. So people are going to watch it for, I think, at least a year or two to see if the LME prices will remain stable before making upstream investments into smelting is at least my view.
All right, Mr. Pai, just a couple of questions then. You know, by the end of this 2017, how much of that Chinese capacity, if you could give us an absolute number, sir, you know, if you're talking about 35 million tons coming in from China in terms of aluminium, how much of capacity you expect that will be shut down? Is it 3.5 million tons, whatever number you are working with? And also, Mr. Pai, you were talking about prices going through the roof. What is your hedging policy going to be? Because I think the hedging number was at around, the hedged aluminium price was at around $1,700 approximately. And as you said, we've gone to around $2,000. So your comments on both those 2 points.
So I think that the Chinese capacity in the first half of this year, the capacity was 40 million, and their actual production was something like 36.5 million.
Okay.
And I think that if you take, they are talking about cutting about 2 to 2.5 million tons, which should bring them just below 35 million tons.
Right.
The Chinese consumption is around 35 million tons.
Right.
Which means that net there'll be hardly any metal for import out of China.
Right.
Whereas today China is importing about 2 million tons. So if that happens, it's going to provide a fairly strong base of support to the aluminium prices. Right?
Right.
So that's the first part of your question. As far as Hindalco's hedging strategy, I mean, our strategy has consistently been defensive. So we do what we call a rupee LME hedge, about 20 to 30% of our metal going forward. So as you pointed out, the LME may be low, but when we did the hedge, the rupee was quite low as well. So we got rupees at around 72. So that's why I say, as a rupee LME hedge, we are okay.
So, so I'm a little confused on that
and
one.
I think going forward, we will still continue the same policy.
Sir, but if we are so positive on aluminium prices, why are we hedging it? That's my only point. And also the proportion of the amount of aluminium that has been hedged, that's increased. So that's why, a lot of analysts on the street as well, they want to understand that we are quite positive. Go ahead, sir.
I think, this year is where you have seen the numbers. Next year, we are not going to hedge much.
All right, so what is the proportion?
What you're talking about is the existing quarter 3, quarter 4.
Right. So what is the proportion, sir, that has been hedged?
We will not be doing more than 20 to 30%.
20 to 30%.
As we... For which year?
For FY18,
for next year
FY19.
you're talking about?
Yes, sir. FY18, FY19.
Yes. FY18-19, right now we are about 20. And we will watch the LME, and probably normal policy is that by December, January, we should be at about 30%, not more. And we have no intention of doing more than that.
Super. All right.
Mr. Pai, thanks very much, sir. It's a pleasure. Thank you very much for taking our questions and answering them for us and our viewers. Thanks indeed, sir. Appreciate it. Okay, so that is the Hindalco management with everything to do with the pricing environment, and of course, what their response to that essentially is going to be. The part about hedging is quite important, because if you hedge quite a bit, you don't make money on the upside if prices go up. But if you don't hedge, you never know what happens if prices dip. There are flashes at the bottom of your screen, and this is with regards to the telecom industry.